You work 40 hours a week trading your finite time for heavily taxed dollars. As this equation shows, the moment that time converts to cash, the tax code takes its cut, often leaving you with a deficit of both time and capital. This system is mathematically designed to keep you broke. Relying solely on a salary is like balancing your entire future on a single leg. When that one source of income fails, the entire structure of your life collapses. Most people never escape this cycle, but self-made millionaires operate on a different architecture. They deploy specific rules to stop trading time for money, replacing that single pillar with a systemic blueprint for wealth. Since a salary-dependent model creates a single point of failure, we have to look at the mechanics of capital. Replacing the old system starts with a specific sequence of rules. Rule 1. Start small, but start early. This chart illustrates the exponential upward curve of reinvested dividends compared to a flat line of static savings. Because the math of compounding does not care about the size of the initial check, momentum always beats magnitude. Rule 2. Crush lifestyle inflation. When you get a raise and immediately upgrade your apartment or finance a luxury car, you are passing your new wealth directly to banks and landlords. Wealth is not what you earn. It is what you keep and deploy. Saving alone will not make you wealthy. You have to upgrade the engine. Rule 3. You are the primary asset. Warren Buffett operates by this rule. Knowledge is the only asset that aggressively appreciates and cannot be taxed. Solving more complex problems directly increases your market value. Building early financial momentum is meaningless unless you simultaneously restrict present spending and actively increase your own intellectual value. Rule 4. Stop chasing money. Chase problems instead. Working longer hours does not scale, but solving a massive problem, like Amazon did for distribution, results in capital flowing to you automatically as a byproduct of the value created. But you cannot build a solution if you give your time away. Rule 5. Weaponize the word no. Every time you say yes to a minor distraction, you commit your most finite resource. Elimination is the primary method for protecting your attention. Rule 6. Think in decades, not days. Amateurs seek instant gratification through consumption, while millionaires prioritize long-term returns. Every dollar spent today is $10 lost from your future self. Protecting your attention and focusing on decade-long problem-solving are the mandatory mental shifts required to build autonomy. Autonomy requires leverage. Rule 7. Build multiple income streams. Look at this structure. If one pillar, like a dividend portfolio or a rental property, is destroyed by a market crash, the roof remains stable. Wealthy operators build tables with 4, 5, or 6 legs. Rule 8. Embrace calculated risk. Playing it entirely safe guarantees failure because inflation destroys stagnant cash. Millionaires don't gamble. They isolate the downside and test small variables before deploying heavy capital. Rule 9. Upgrade your room. Your net worth will inevitably mirror your closest associations. Networking strategically with operators who make your goals look small provides the proximity needed to scale. But progress dies if you make one fatal error. Rule 10. Destroy bad debt. High-interest debt for consumer liabilities acts as a financial black hole. It consumes your future labor to pay for past dopamine hits. Creating multiple income streams is only a viable strategy if you systematically defend the entire structure against the lethal threat of bad debt. Rule 11. Delegate everything below your hourly rate. If you spend 3 hours on a task you could outsource for $20, you are losing money. Buy back your time and deploy it into high-leverage strategy. Rule 12. Demand ownership. A high salary will never make you truly wealthy because the tax code punishes W-2 income. True wealth requires equity in businesses, real estate, or intellectual property to disconnect your income from your physical labor. Rule 13. Weaponized failure. Amateurs view a loss as a permanent identity, but operators view it as a data point. Each failure exposes a flaw in your system that can be patched before the next deployment. True generational wealth is mathematically impossible without fully transitioning from labor-based income to ownership-based equity. Time is the ultimate currency. You get exactly 24 hours today, and you can never buy them back. If you continue trading those hours for a static paycheck, Your purchasing power will drop as inflation rises. Without a system, the economy will exploit your labor until you can no longer work. Start building your system today. Drop a comment below with the rule you are implementing first, and hit subscribe to lock in your financial education. Implementing these 13 rules provides the structural foundation required to decouple your income from your labor and reach permanent autonomy. We will see you next time.